Home buyers are coming back to 22,000 plus active listings as interest rate cuts begin. Now, 22,000 active listings represents a very high and abnormal amount of properties to buy. And it's about 25%, give or take, higher than the historic average that we'd be having right now at this time seasonally. Just to give you a little bit of scale of how many properties there are on the market right now. So this is the precedent that buyers are coming off of the sidelines for and to when they're looking to buy their next property. Meaning, I do not think prices will be going up anytime soon outside the season norm. But if the rate cuts keep coming, this inventory that is a little bit excessive right now, like 25% more excessive, is likely going to get absorbed. The question is how fast and how many more rate cuts are coming. This is exactly what I'll be breaking down for you on this month's Market Watch, so make sure to stay tuned. Now, if you do want to work with our team who are more data-driven realtors like myself for your next real estate move, you could do so by booking a call with me using a link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on a date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. Holy moly, what a week. A double whammy of way too much real estate news in the Toronto real estate market right now. Oh boy. First, you got your rate cuts yesterday, right? And now kind of like a oxymoron of the rate cut showing us the fact that the market is not doing great right now. Way too many active listings, way too much stuff sitting on the market. And, this is essentially like the worst May ever for the month of inventory and for the new sales to listing ratio. And I'll explain more about that in charts later on. But here are kind of the headline numbers that you'll be seeing right now, which is over here. You can essentially see that, sales are down from last month, but it's not a large amount, which really isn't all that bad because normally between April and May, when I looked in the data, 11 of the 28 years that we actually have data for, April has more sales and the other half has less, obviously. So this kind of, month over month change, I wouldn't say it's an anomaly. And when you look at the kind of price on a month-to-month basis, it went up, which is actually very normal as well, because May or April tends to be the peak of this year in terms of prices. And when I go back, same thing, in the 28 years of history that we've had this, 16 of the 28 years, prices goes up and the other goes down. So in that sense, I wouldn't say it's a big movement. It wasn't a big kind of deviation out of the norm that we would normally be seeing anyway. So that I'm not really too concerned. And now when we look at kind of the average price, it going up, like I said, it's not a big deal, right? Because the average price appreciation from April to May is about 1%, and we're 0.82%. So we're pretty close. Again, nothing crazy out of the norm to look at here. Where it does look very, very drastic is when you start looking at the headlines on a year-over-year basis, and the media will be all over this, where we're talking about the fact that sales are down 21%. That's a lot. And then also prices are down 2.5%. Keep in mind, last year in spring, we had the Silicon Valley Bank collapse, so the spring market was significantly hotter. And when you compare it to what we have this year on a year-over-year basis, we look like doo-doo in 2024 right now. So remember, you have to take into context what the numbers mean, because without context, it could be really blown out of proportion, right? So when you look at the year over year, the numbers are pretty significant in terms of difference, but it's kind of like I was saying, right? Towards the end of March, the market kind of stalled because everyone's anticipating rate cuts, and it's been slow since. So essentially, spring never sprung. Good pun. So the active listings since then continue to pile up. And I briefly touched on this yesterday's video, but you can kind of see this chart over here. We're over 22,000 active listings as of the day of shooting this right now. This means that we have 22,000 properties available to be purchased or for sale, however you want to frame it. Well above anything that you can see in the last 5 years. We're really, really high up. We're well out of one standard deviation. And when I go back historically, we've never had this many active listings outside of two anomalies. One being the foreign buyer tax of 2017, which has just absolutely wiped out the market. And the second one is that we have to go all the way back to the GFC, which is kind of in 2006. So it's that bad. Like, it's a lot of listings. And like I was saying yesterday, one measly 25 basis point rate cut does not move the needle on these active listings, especially at the speed that people want it to. Now, if we get 2 or 3, yeah, it may move the needle. But 1, I don't know, right? Which I would say could be an opportunity if you believe that there are more rate cuts to come. Now, when you look at this chart over here, you can kind of see that the sales is pretty anemic, right? It's really, really, really low. And now in this chart, when you look at the new listings, meaning new inventory coming online, it's pretty normal if you look at it. So I wouldn't say like sellers are rushing to sell in the month of May. It's just kind of, this is the norm. But the problem is that nobody is buying, so the inventory is building up. Like I said yesterday as well, I do think there are a lot of pent-up sellers that may come on the market as well. And ultimately, we'll have to see how this plays out. But when you add all of the stuff I just showed you up, it means that the month of inventory is increasing as inventory is piling up because it's not being bought. So it's not like quite as bad as the depths of pandemic, as you can tell in this chart, nor was it as bad as like fall last year. So that's like the silver lining of all of this. And now that the rate cut is here, in theory, it should be better and like the worst is behind us. But it just, doesn't mean the market's going to rebound immediately, right? Like I said earlier, 25 bips is not going to move the needle that much, right? Now, the challenge I personally see in the market right now is how long will it take this rate cut to change the sentiment so that the buyers are actually going to come out of hiding or like off the sideline and start absorbing some of this inventory, and that we revert to a more balanced market that we're accustomed to in Toronto, which is, leaning towards more of a seller market. And personally, I think it's going to be longer than what most people think because we're heading into the summer. Yes, we get a little bit of boost for the last bit of the spring market, but it may not be enough because affordability hasn't changed with this rate cut. It's just that the sentiment may change given a certain duration. So I would say, overall, this May wasn't that bad for prices. And I could argue that low sales is really because the sellers aren't budging on their price unless they absolutely have to sell because they know a rate cut is coming. And obviously it came yesterday, right? So I suspect this will probably continue unless the sellers are highly, highly motivated and, they're bleeding like crazy. Now, if we look back at the historic data, this is where things are going to get really messy. And you can see here that May right now in 2024, very, very high active listings. Like I was saying before, you have to go back to 2017, post foreign buyer tax or pre-GFC to see this many active listings in May because May tends to be a very strong spring market. And I suspect that with the rate cut, inventory should move faster again and it won't pile up like I was concerned about, when we roll into the summer months because we got that potential sentiment change with the rate cut. Now, historically, sales, you can see, really, really bad, right? Nowhere near where they should be. And this is why you have the months of inventory so high right now. So if you look at this chart over here, it has never been this high before in May. 3 months of inventory in May is unheard of. This again tells me that the buyers are missing because we got a historically average amount of new listings for May, but there just weren't that many buyers buying, which tells me again that not many sellers were rushing to sell. It's just the buyers have vanished, right? Now, will we see the buyers come off the sidelines given the rate cut? Yeah, of course. And this circles back to the question I asked earlier, how quickly? That's going to be TBD, right? And finally, no matter how you slice it, this chart is this chart. You can see this May, on top of being historically high for the months of inventory, and by the way, high means bad, like it's bad for sellers, so like, advantageous for buyers. We also have a historically low sales to new listing ratio. And what this basically means is that people weren't buying these properties as they were coming up, right? Which is the whole theme of this video. And it's generally a bad news for sellers. So you can see that this is the worst May ever for months of inventory and the sales to new listing ratio. And those are two very important dynamics that point to where prices will be in the next 60 to 90 days. So could this rate cut have come at a better time? Probably not. This is basically bailing out the market with a sentiment change, right? Because if we went into the summer without the rate cut, holy cow, I really think inventory was really going to start building up. Now, the question is, how much of those pent-up sellers are going to come to the market, and can that sentiment for buyers outpace the sellers coming online? And that's all going to be TBD in the next 30 to 60 days. But I'll keep you posted as I kind of go through the market on boots on the ground data to tell you what's going on, right? But I do think that the people who are coming off the sidelines will be first-time home buyers because they can take advantage of the high condo inventory right now and ride the condo inventory down before seeing prices start to appreciate after maybe some more rate cuts. And if you do want to kind of chat with me about that particular plan, you could do so by using the link on the screen right here. It's www.chatwithzen.com. Hopefully this gives you an idea of what's happening in the market. And until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.